Hey, good morning, everybody. This is Vance Williams. It's Wednesday, April 14th, 2016. I'm out here near Seattle, let's begin. The story this morning was poor retail performance out of the U.S. The numbers weren't that off. They were expecting minus 0.1 and they got minus 0.3. The rise in oil prices has been the result of meetings between the key players in Europe, Russia, and so on. Maybe OPEC, but those talks seem to be breaking down at the moment, and this could cause a fall in oil when investors see the writing on the wall. This would probably cause a rise in the Canadian dollar, or excuse me, a rise in the U.S. dollar versus Canadian dollar. I don't think the retail sales figures mean that much. I mean, it is contextual. People are going to shop less the last month before taxes are due. Optimism is still high for the U.S. economy, in particular when it comes to comparing separate economies. Remember that it's not the state of the U.S. that matters only. It's how the U.S. is doing against another economy like the U.K. or the Eurozone. Getting to price, you notice we've had 3 touches off this level. That will tend to excite the sellers here. So this was a potential if you were waiting right here and seeing this constantly defeated, right here on this close might have been a good shot to grab about 10. We'll watch and see. But let's go over to the pound, go out to the 30-minute. As you can see, I have a couple of I have supply and demand lines here. These are, let me adjust these based upon the 30-minute. So you can see this level is just holding right to the pip. We would expect also some serious buying interest right at this level as well. As you can see, this trend hit 61.8, took a bounce and went sideways in a range of about 76. So we're basically looking for a change here. We're looking for buyers to overcome this downward trend or sellers to continue and show some added strength below this level. Probably the most conservative trade would be, and let's go up to the 30-minute. It's going to be on the euro dollar. Actually, I prefer the pound. Okay, this, as you can see, the balance of money is basically right in the middle, but shifted a little bit to the downside. So what I would be looking for is a change right here, maybe a stretch out and pull back, or a 5-minute candle close below this line right here. And it would be helpful if it was also below this 30-minute candle close, and we can go ahead and put a line on there. In terms of, and it's going to be the bottom of that rectangle, so it ends up being the exact spot. So if it runs down here, and that's not that far, right now it has, well, it's 26, 28 to go. So that's what I would be looking for, is the kind of optimal setup here. And then you'd have to also be sensitive to the fact that there's going to be a risk increase. If you're selling here, you're going to get a lot of buyers right here at 76.4. There'll be some orders here from these buyers. And let's see, so how much room? If you got to close below this, you've got about 29 pips to move. So there's an opportunity from here to here if price breaks there. If price breaks up, I'm not too excited about this. These sellers are going to continue to be in the area. We can put a fib coming down, showing that you'll likely you get selling interest at 50, 61.8, and 76.4. So this is not that appetizing. Again, we'll look for the break here. I don't know if we'll get it, but we'll watch. In terms of the euro, as you can see, it's been trending down since London, about 62. And then on the last move down, which is about right here, you can see how this goes sideways. The last move down starts here, and you had a move back to 50%, followed by what's happening is the second push right now. I would look for this level to be broken, and I do have a rectangle on there to kind of show you, see how that, this is where the buyers and sellers reach 50-50. So I would need to see this come below here. Now, as I said at the start, on this third attempt, when it failed and closed, there was probably 10 pips here. Let's see if we got that already. No, not quite. It needs to go one more pip lower. How do I know that? Just watching the behavior. Why didn't I trade it? You have to have your rules for executing your trade clearly defined. Otherwise, emotion will cause you to live in an imaginary world, imagine that you can do things that you can't, or be afraid of doing things that you should. So in other words, it's kind of like if you're walking down a path and there's monsters on each side, happy monsters on, let's say there's happy people on the left and, saying, hey, you're doing so incredible. And then on the right, there's monsters that are threatening your life. If you don't have rules for walking on the path, you get off in with the monsters or in with the happy people. Either way, you lose because you end up making emotional decisions. So the answer is this does not fit into my trading plan. I think, okay, so this line, what is this line here? I'm going to go out and show you what this line is and show you why there's a hold up here. I'm going to go out to the daily, which I rarely do because, well, the market's not what it used to be. The amount of money that moves each day or every 3 to 5 days can turn on a dime. And so, but every once in a while, these levels do matter. And you can see it's holding right here. I think this is artificially holding up the sellers right now. And so, I mean, for that reason, along with the fundamentals, I think we're going to see a drop through here, but we'll see. So you can see it's holding right on that line. And note that this is a 5-minute chart, and it's right on that daily line. See it held here? I had this line in place before price got here, and it held here to the pip. And then it's creeped below a little bit there, but now it's held. But the sellers are looking very strong, and I don't think the long-term buyers are going to be able to hold it. I think it's going to go, which means the pound might be dragged down as well below this level. So we can watch for that. If you look, this is also 1, 2, 3 levels right in here as well. Tests, just checking the sound there. Let's see, while we're waiting for that to happen, let me go ahead and bring up a browser. I want to show you guys, if you don't have this book, this might be one of the most valuable books you ever download. Just click here and you'll notice, it doesn't ask for an email or anything. You just have the book. You'll just see that, right? You have the book, Forex Legacy, Master the Market, Master Yourself. This is a pretty huge book. And what it does is it captures my 11 years of experience as a Forex trader, not just trading and how I read the market and how I develop the discipline to do it, but also all of the knowledge that was involved in my many, many years of training others and everything that went into that. So that's yours for free. I think you'll find it's the most valuable Forex trading book you've ever seen. I put that book together when I decided to retire from Forex trading about a year ago. The reason why am I still here? Well, I have a community of people that I work with, and I told them that I would be here 3 days a week, Tuesday, Wednesday, and Thursday mornings, and check their work throughout the day. And I was going to stop that after about 6 to 8 months, but I've been enjoying it, so I'm continuing on with that. Okay, so let's get back to the market. And right now, guys, there's really not anything to buy in my site. I'm thinking about opening up for some training. So write me at vancewilliams@myself.com if you want to learn more about that. vancewilliams@myself.com. All right, so we're still watching. As you can see, yesterday I was really watching 1 minute, 5 minute candle close and reading price, literally in real time, second by second. Today there's no need for that until we get down around here. Euro, as you can see, they're still pressing below that level. They're kind of right where they were before. Not much to add. Let's take this down to the 5. Now, when I drop from 30 minute to a 5 minute, I'm not trading a 5 minute chart. What I'm doing is zooming in. I'm getting a closer look. I can see more movement and behavior. how many contracts in the entire world were executed in a period of 5 minutes, for example, and who won that battle for 5 full minutes or 30 minutes. So I'm not trading a 5-minute chart. I'm not looking at these moving averages on a 5-minute chart. And the only thing I'm concerned with right now, we're in a range. The only thing I'm concerned with is, I got to see an obvious advantage on the part of the buyers coming above here or the sellers going below here. Until then, it could just go any which way. And again, I'm leaning towards a move to the downside. You saw, now look at this close, a little bit lower than this one. So now we're into some kind of real-time reading here. This is going to encourage the sellers just a little bit, because you see this is closed a little bit lower. So here they go, pushing a little bit. They might just try it now. I think we've got that 10 pips now since I opened the broadcast. I think we definitely got it now. It was right here. And then we got, yeah, it's kind of right there. Maybe I probably missed by the spread so far. Okay, now the machine traders will be looking to buy at the close, and then they'll just keep selling right in this area until it drops below here. Then they'll get out, and then when it drops and it pulls back again, the machine traders will sell again. That's just how do I know that? I just watch them. Just watch the movement. By the way, if you're watching for the first time, you'll notice I'm able to do this all the time. I've been doing this so long. I just see what they're doing. If you're new, or maybe you got a year under your belt, you're going to need to, treat this like anything else. If you were learning to hit a baseball, you're not going to get in the major leagues and hit a baseball. You got to start off, with a batting cage, or, learning form, keeping your eye on the ball. There's no shortcut to that. You have to learn the skills. And so in my book, I give you all of those things that you need to do in order to prepare. And so one of the things, if you've been trading for 2 or 3 years and haven't gotten the results you want, if you go through my book, Forex Legacy, you'll be able to see, oh, I didn't do that, or I didn't do that, or geez, I didn't do that at all. So it gives you an idea of what you haven't done. And let me let you know that if you haven't read this book, there might be a lot of things that you haven't done, just because 95% of the Forex market is really focused on something that doesn't work at all. Well, let me see. Nothing meaningful developing yet. See if I had anyone join me here. No one on the Google Hangout. Well, I just invited one person. Yesterday, I didn't invite anyone. A little bit of dead air. My voice is kind of cracking a little bit because I was here for the last 2 hours and 10 minutes without saying a word to anyone. It's just me here with my computer evaluating the market. So in other words, I didn't use my voice. It's because if you're laying down for hours and you just stood up for the first time, your legs aren't going to be 100%. So again, we need this to move out of this range. Okay, there goes the euro. It definitely hit the 10 now. And we might actually get an opportunity here. Let's see. Going to get some buy orders sitting right here. You see them being executed right now. Also, the machine traders will try to get 1 or 2 here. They're in and out very, very quickly. It's just computers. There's nobody making those trades, just computers coming into a important level. Grab one, get out. If it's strong coming in, they've got an algorithm that says sell again. Then when it hits again, they buy again. And they just keep doing that until the sellers push through here. And then once it comes through here, if it comes back to here, they sell. And, that's just the way it works. And we're talking about thousands and thousands of transactions happening in fractions of a second. So lots of buyers interested in this level. We knew that, but the selling is quite strong. So to get through here, the amount of selling interest that's going on right here has to overcome the buy orders that are sitting in this area. And I don't know if they have the impetus to do that, but we don't need to guess that. We'll just watch and see if they do. Pound's just completely doing nothing. And one of the reasons why it's holding here, I don't have a line on here, but you can see this level right here. And I usually choose candle bodies on the 5 minute to show meaningful change. Again, because a 5 minute candle body is saying between the buyers and sellers over a 5 minute period of time, who had more strength, buyers or sellers? And you can see it closed here, it closed here. So these levels represent a 5 minute period where buyer and seller interest equaled 50-50. So 50-50 here, 50-50 at this point. And so in other words, as price was moving down at exactly that mark, there was an equal number of buyers and sellers in terms of money anyway. And so that's why you get this. They jump on a little bit early here, which is why you haven't seen it come through. All right, so there goes the sellers pushing again. Now, at this point, when you see close to it and then you see a red candle, this will sometimes discourage the buyers from participating anymore and get us a move through here. Let's at least see if they can break that former low on that tail right there. One more move and they got it. Not yet. There they go. They just touched below. How do I know this is going to happen? Well, the bankers are telling me what they're doing. No, not really. Okay, so now's where we can look at the candles. Now we're at the start. We're kind of 1 minute into this 5 minute candle. I would need to close below this. You see the buyers jumping in here. They had some late orders here, thinking it might dip below here and then launch back up. Again, let's get some perspective. Go back out to the 30. We're in a clear downtrend, so we're good. And what I would be looking for is for the sellers to basically take out the buyers over a 5 minute period, closing below this level. But we've already seen a change right here. Now, if you're using a pullback strategy like in my book, then you would look at this. You would go up here, get a ruler, and basically, actually, this goes all the way up to here. Let me change this all the way up to here, and you would see how far has that move gone. It's gone 17. That's a bit weak in terms of a range of advance on a trend. See, it's breaking new trend ground, so I don't really care for that too much. What I would like to see a minimum of 18. Let me fix this here. All right, so I'd like to see a close. If I get a close, wait a minute, we got, how much time we got left? We got 2 minutes and 40 seconds left on this candle. And you want to wait because you want to see how much buying interest there is. Can the buyers push it back up to this line? They often do. Now, as we get later in the candle, let's say the last 2 minutes, which we're getting close to, we're at about 15 seconds to go till our last 2 minutes. This, if the sellers see that there's not enough strength to push this up late in the candle, that'll basically embolden them to sell a bit more. So let's watch and see what happens there. All right, so we're down to 1 minute 50 seconds. So this is probably the area where the sellers will start be thinking, wow, you know what, the buyers aren't doing this. So it's already been 3 minutes. They haven't been able to push this up. Now that said, I've seen them push at the last minute all the way back up here before. So we'll see. But what we'd like to see is we'd like to see this close. We got a minute and a half left. We'd like to see this close below. And then you could probably trade right at the close, unless it's at the bottom or near the bottom here. Otherwise, you want to wait for a little bit of a pullback. Now, for those trading a pullback system like in my book, where you're just trading that simple pattern of trend advance, range of advance 18 or higher, pullback to 38.2, you'd be looking for this. But the problem is it's actually above this range. So price is less likely to get in there. Okay, so we've got 55 seconds left in this candle. It's starting to look like it's definitely going to go. Now, one of the things that can happen here as we're watching this is it just kind of take off here and just leave without us. And if it gets too far, I personally wouldn't be interested. But you still got the potential if it moves here. Let's say the 38.2 level gets right in here then you've got another opportunity. So it's pushing pretty strong. There's about 25 seconds left to go. 20 to 25, and there it goes. See, that's what I was talking about. So we got about 15 seconds left, 10 to 15. I'm not sure which. There they go again. See how strong they're pushing, seeing that the buyers are not going to get back in. So that's something that you could consider as well. Let's see what our ROA is now. It's probably about 24. Yep, 24 exactly. All right, so now as you can see, just like I predicted, 38.2 is right in here below this level. So you could look for a pullback here. The sellers waited for a long time to get through here, so they might not come back. They might just keep going for a while. And at some point, your ROA gets so big, you know, you don't want to mess with it. ROA, again, is range of advance. Like, what that means is, and you see this in my book, as this is breaking new ground for the trend, how long is that range of advance without any pullback to 38.2 or more? As you can see, it just continues to push. So about the only thing you could have done there is when you got down to the last 30 seconds, you could have possibly punched the button there. Your risk exposure would have been bigger, although I can see your stop could have easily been here and maybe easily gotten 10, but that's a little bit riskier. So it just continues to gain here. Now we've got an ROA of 26. Still a chance for it to pull back, but it's going. Let's see what the pound's doing. The pound's now flirting with that low level. It's running into the buyers, just like we saw at the euro levels. Now the sellers have to get through there. Now they did get through this line. How much room was there between here and here? Not a lot. And you wouldn't have got, if this would have closed a little bit below, maybe you could have popped 10 out of here. And how am I doing this? You look for the advantage. That would be the 5-minute candle close. You look for the strength of that advantage. How strong are they? And how are you going to manage your risk? Where are you going to put your stop? Where are you going to put your target? Where the target is likely to be hit and the stop is likely to be avoided. So, but that's really advanced stuff. Okay, so here we come with our pullback here. Oh yeah, the pound's pulling back to there. So they're taking low profits. 23.6 is the first level. It hit, picked up some machine traders right there again, which there almost always are. And I'm not sure we're going to get an opportunity here. You don't want to jump in here at the bottom. If you jump in right here, that means you're exposed all the way to here. And if you want to get your stop way up here, that means you got to go way down here to hit a target. I mean, in other words, the market's got to break new ground. So you want to have your target within the range of the advance for sure, and particularly the 5-minute candle body close. So this just takes practice of seeing how this works. So your stop is safe here. Your target is safe anywhere in here. So you got to get a relationship, a risk to reward ratio of 0.75 to 1 or 1 to 1 in order to make this all work. And if you just wait for that, you'll win. And if you do what I do here, you'll win about 90% of the time and make good profits. But, you know, again, this is a lot of experience I have doing this. And I'll be wrapping up here in about 6 or 7 minutes. All right, so one of the things that you could do is you could put a sell entry order right here. I'll just do that just to show you what that looks like. Create entry order. We're going to do that at 129. We're going to do it at 12900. So just in case that flies up there real quick, maybe it would pick up the order. And, you know, you might want to go just a tiny bit below that just because there will be a lot of orders sitting there. They'll jump early. Now, if you put in an entry order, make sure you monitor it. And also, you want to have a safety stop. Let's say 112.98. I'm going to get that in as soon as possible. What did I say? 129. Let's just go with 64, then we can move it. 94, rather. Wait, what is that? 129.64. I'm making some kind of rookie mistake here. 129.98. Must be a spread issue right now. What if I put it at 11300? Nope. Oh, I think I see what I did. Whoops. I actually put in, sorry, I put in the wrong order, guys. Look at that. Create entry order. Got to hit the sell button. And we're going to go with 129.01. Let's go with 12900. Now the stop should work. We're going to put it at, let's go with 11300. One of the reasons why I made a rookie mistake there is I didn't really trade on this platform. I traded on Interactive Brokers. Okay, so let's just throw a target in at 112.80 and then we can move it. Yeah, I like that. Now, the optimal target is going to be up here, which means that you would need to wait for a much better price in order to get the optimal target. Why is the optimal target here? Because look at all these buy orders sitting here. So you want to be right here. So what I would do that would be different is I would move this. If you wanted to manage the risk very well, you move this up to 50%, say okay, and then move this up to a 1-to-1 situation. So there you go, something like that. And now you've got, now all your risk is managed well. Your stop is above this level. Your target is within the range of the 5-minute candle, and your entries in an attainable spot. So what if the order doesn't get picked up? Well, you don't get the trade. Simple as that. Now, and also again, remember, set an alarm or anything you need to do, but make sure that if you step away from the computer and you're trading a live account, that you cancel these orders. Whenever you use entry orders, you got to remember to cancel them. I hardly ever use entry orders. Almost everything I do is market execution. All right, we just got a minute or two left here, about 2 minutes. Then I'm going to wrap it up for the morning. I'll be back again tomorrow morning at 9:30 a.m. Eastern. Sometimes I'm going to do the session a little bit early. For our members, you'll see me post the link and I'll tell you what time I'm doing it. I'm going to try to do it at the same time each morning. But if I've got some plans in the morning and I'm, up at 4:30 here on the West Coast, I might just, do the session at 5:30 my time, which is 8:30 a.m. Eastern. Well, they're holding. Let's see if that pound made a move. Nope. Nope, it's holding. Now this move up might just drag our euro into an entry. We'll have to see. Yeah, it looks like it's going to go. When the market perceives it is very bearish, they'll normally take profits to about 23.6 and then reposition again. And you really don't know that until it's happening. So it's really nothing you can predict. If you were a machine trader with almost zero spreads, it would be very easy for you to just pop a bunch of little trades right here, but you're not a machine trader. And you don't have almost zero spreads, so you can't really do that. Plus, you don't have the execution that they have. FYI, back when we were talking to swap traders, this was back in 2005, before the machine trades were really taking off in a big way, the swap traders were doing that manually and taking on average about 187 trades each per day. How many do I take? I average about 2 a week. About what I do. Okay, we're about out of time. I'm going to go ahead and cancel these orders. So, because I'm not going to be here to monitor this. Again, you know, if you want my free book, you know, I don't even sell it. I could sell it for, I think, a lot of money. I don't. I just left it behind for you guys. I got to warn you, though, it's going to tell you that this is a lot harder than you think it is. But if you're up for that, it's going to show you how to do it. With that, I'm gonna wrap it up. You guys have a great day. To our members, I'll check out your work in the forums later. Have a great day. Bye, everyone.